Welcome back. Let's get another corporate conversation going on MCR. TD Power Systems Management is here with us. They're joining in from the Motilal Oswal conference. The company closed Q1 with a very strong order book of more than 1,300 crore rupees. Also note, the company reported a pretty healthy set of Q1 numbers. The top line growth was 7.8%. Margins expanded to 17.7% versus 15.5%. We're now joined to talk about the way forward. Nikhil Kumar, Managing Director of TD Power, is with us on the show now. Thank you very much for joining in. Mr. Kumar, very strong order wins. Your execution has been solid in the quarters gone by. But the question is, can this current run rate of order wins continue in the future? What's the visibility that you have, say for the next 12 months, 24 months in terms of order wins and even beyond that?
Yeah, we're seeing actually this order momentum continue. We have a very, very strong pipeline. Actually, I also mentioned in my last earnings call that we're seeing July of about 100 crores of order inflow. We're seeing a very, very strong order inflow also in August. So I'm absolutely confident that the order inflow from both domestic and export continues to be very strong and will be sustained because we are seeing a big pipeline in the inquiry book.
What were the order wins in August so far, and what's the current pipeline?
I can't disclose order numbers, August numbers, but I can only disclose what I've disclosed in the last earnings call. But I can only say that order inflow continues to be very, very strong, and at the end of the quarter, we will be able to report extremely strong positive numbers to the market.
Okay. While you can't disclose the order inflow and the targets that you have, can you give us a sense in terms of what this would do to your margins? Because you've done around 17.7% in terms of your Q1 margins, much better than that 16% that you closed FY23 with as well. Based on your visibility, what would it do to, say, your revenue in FY24 as well as your margins?
Yeah, so as we go forward in the next 3 quarters, we're going to see greater operational leverage kicking in. We had relatively our lowest quarterly performance, you can say, in Q1 in terms of top line. But Q2, Q3, Q4 is going to be significantly higher. So we will see EBITDA margins expand above what we have declared for Q1. I can say the bottom could be 17.5 for the whole year, but I know I tend to be a little conservative. We'll do better than that for sure.
Okay. I wanted to also find out what might be the breakup or what might be the potential benefit from the railway segment. Yesterday we were discussing the Vande Bharat capex lined up, and it is significant, at least for the next 4 to 5 years. And since it is indigenous production entirely, there is a lot of bidding which is probably expected to take place. Would you be bidding? Are you supplying to the railways in terms of incremental orders? And how much, if you could quantify the opportunity?
So we have our existing railway business is with a major international multinational company who is currently building the 12,000 horsepower locomotives for the Indian Railways. That compromises almost 750 crores of our current order book, and that is spread over the next 5 years. So that is our significant, I would say, contribution towards the railway business. We also supply directly to the Indian Railways, but that is a much smaller proportion of our overall sales. But that will continue to keep growing as we penetrate into the Indian Railways directly, more deeply over the next 2 or 3 years. In terms of new projects, where our big multinational customer has won a tender for the Vande Bharat trains. They're also bidding for the new projects for the 9,000 horsepower and the 12,000 horsepower. Of course, the dates have not been announced as yet, but the Indian Railways, there's so much potential in this segment. We are well plugged into the market. As and when these tenders come out, and once let's see who wins. Based on that, we will assess our chances as to what kind of business we can get. But it's really promising and exciting right now.
Mr. Kumar, you had given a guidance of 255 to 265 crore of a top line in Q2 and 1,000 crores of a revenue guidance for the full year. Are you on track to achieve it?
Yes, most certainly. So we are most certainly going to hit our Q2 numbers, and the order build-up, the order inflow for this year is absolutely certain. We will deliver the 1,000 crore top line, and also the EBITDA margins that I talked about, better than 17.5. So it's going as per plan at the moment.
This 17.5% is the margin guidance for this year. Is there a structural improvement in margins we can expect? Can next year's margins be even better? Give us a long-term lay on margins.
So we have 2 plants in Bangalore, and we have a production capacity to go up to maybe 1,300 crores in these 2 plants. So when we get to close to full production capacity, we will see operational leverage kicking in, and that will give us higher EBITDA margins because we're producing more from the same fixed costs. I can't give you exact guidance what it's going to be like for FY25, but if we do end up with 1,200 crores, we will most definitely end up with higher EBITDA margins because of operational leverage. But let's see how it all works out for next year. We still have time, but this is the management's goal. All I can say is to keep improving the EBITDA margins with operational leverage.
Okay, all right. So we're going to leave it on that note. It's been a pleasure. Thank you very much for joining in and speaking to us. So that is TD Power, confident in terms of order inflows as well as margins going forward. We need to take a short break, but up next we'll get you more on the markets. A lot of stocks in focus. Stay tuned.